Hello everyone, welcome to my channel, Quantum Analyst, focusing on quantum stock investing. In today's video, I am going to review D-Wave's just released second quarter earnings. I will break this short video into 4 sections. First, I will briefly introduce D-Wave. Secondly, I will walk you through its second quarter earnings. Thirdly, I will review its stock performance, ticker symbol QBTS. Lastly, I will share my opinion about if this company can survive. Let's go. D-Wave is a quantum computing company based in Canada. It develops and delivers quantum computing systems. Founded in 1999, D-Wave was the first company to sell commercial quantum computers. D-Wave's computers use a type of technology called quantum annealing. This type of computing is well suited for solving optimization problems, such as finding the lowest energy state of a molecule, or the most efficient route for a delivery truck. Major customers of D-Wave include global companies like Volkswagen, Denso, MasterCard, Lockheed Martin, and more. D-Wave went public on August 5, 2022, by merging with a SPAC, rather than through a traditional initial public offering. This deal provided a faster and simpler path for D-Wave to become a publicly traded company. D-Wave Quantum Inc. is listed on the NYSE and the company's common stock is traded under the ticker symbol QBTS. Now let's have a look of its second quarter earnings, which was released this morning, on August 10, 2023. Every time when I am reading an earnings news release from a public company, I always pay special attention to the first sentence of the news release, because it sets the tone of the whole earnings. Most of the time, 1 or 2 key words will let the investor know it is upbeat or downbeat, bright or gloomy. In D-Wave's news release today, the first sentence is this: our second quarter results reflect, we believe, growing enterprise commitment to and investment in practical quantum computing solutions that can address their complex operational challenges today. Our triple-digit increases in bookings and average deal size on a year-over-year basis are evidence, in our opinion, of forward-looking organizations prioritizing quantum as part of their modern tech infrastructure, said Dr. Alan Baratz, CEO of D-Wave. How do I feel? First of all, I feel nothing material. The statement is long, but very obscure, no concrete information. Additionally, he said, we believe, and, in our opinion, I interpret these words as lacking of confidence. The above feel can be confirmed by the following earning numbers. By looking at the numbers, it is hard to believe, this is a 24-year-old company. Revenue for the second quarter of fiscal 2023 was $1.7 million, negligible. Bookings for the second quarter of fiscal 2023 were $2.5 million, negligible. Customers. Over the last 4 quarters, D-Wave had 68 revenue-producing commercial customers, compared with 72 commercial customers in the immediately preceding 4 quarters. This is a red flag. Its customer base is shrinking. Net loss for the second quarter of fiscal 2023 was $25.9 million, or 20 cents per share, compared with a net loss of $13.3 million, or 11 cents per share, in the second quarter of fiscal 2022. Net loss widened. During the quarter, the company burned $29 million in operating activities. Overall, the numbers are terrible. How much cash does D-Wave have right now? This is critical because it will decide how long D-Wave can survive. At the end of the quarter, which is June 30, 2023, D-Wave's cash balance is $7.5 million. But as the company disclosed, as of August 8, 2023, D-Wave's consolidated cash balance exceeded $50 million. This represents the company's largest cash balance in its history. Where was those new cash from? The company discoursed, money are from 2 investors, PSP Investments and Lincoln Park Capital Fund. Let's look at the financing deals one by one. First, PSP Investments. PSP Investments is one of Canada's largest pension investment managers, with CAD $243.7 billion of net assets under management as at March 31, 2023. It invests funds for the pension plans of the Public Service, the Canadian Armed Forces, the Royal Canadian Mounted Police and the Reserve Force. On April 13, 2023, D-Wave entered into a $50 million 4-year term loan agreement with an affiliate of PSP Investments. The loan agreement is comprised of 3 individual tranches of $15 million, $15 million, and $20 million respectively and, to date, D-Wave has drawn the first 2 tranches totaling $30 million. However, there can be no assurance that the company will be able to meet the conditions necessary to draw on the 3rd tranche. PSP Investments is also the largest shareholder of D-Wave. According to the proxy document dated June 8, 2023, by the end of the first quarter, PSP Investments holds 59 million shares, represents 46.7% voting power. Next, Lincoln Park Capital Fund. Lincoln Park Capital is a Chicago-based investment group and asset management firm, focused on investing in public and private companies, real estate and money management strategies. On June 16, 2022, D-Wave entered an agreement with Lincoln Park Capital for an equity line of credit, ELOC. This agreement gives D-Wave the right to issue and sell up to $150 million in shares to Lincoln Park over 3 years. D-Wave is not obligated to sell the full $150 million if it does not want to. Certain conditions must be met, like having enough registered shares and share price above $1. By end of Q1 2023, D-Wave had raised about $20 million through the ELOC. This left $130 million still available under the ELOC agreement for the remaining 2+ years. On July 24, 2023, D-Wave started using the ELOC again and raised $35.1 million more through August 8. D-Wave can continue raising capital through the ELOC until June 2025 if needed, subject to meeting the agreed conditions. By the end of June, D-Wave has only $7.5 million cash. If not refinancing, they will run out of money in months, if not weeks. This is why in the very short period of time, from June 30 to August 8, they refinanced from 2 sources. With the speed of burning cash $29 million per quarter, the $50 million they have may not last through the end of this year. Literally, D-Wave is on a life support. D-Wave went public on August 5, 2022, almost exactly 1 year ago. Its stock price also reached the highest point just after it was listed. 1 year later, it is down 88%. Now its market cap is only a little bit above $200 million. This year, there is a bit hype among quantum stocks, especially IonQ, Rigetti. Year to date, IonQ's stock increased more than 300%. Rigetti's stock increased more than 100%. D-Wave's stock didn't benefit very much from it, only increased 15% year to date. Now comes to the final question. Will D-Wave survive? My guess is, its chance is very slim. The second quarter earnings has shown it all. After 20 years as a company, its revenue is only $1.7 million, which is negligible. Its revenue-producing commercial customers are shrinking year over year. It is burning cash every day, and its cash is almost depleted by the end of the second quarter. Even though it raised approximate $50 million cash in the past few weeks, with the speed of burning $29 million cash per quarter, very likely it has to raise money again. Can they make it? Theoretically they could, but the probability is low, from my point of view. This all for today. Do you have any comments? Please leave them down below. If you like this video, please give me a like and subscribe. Your support is very important for me to keep creating contents. Thanks.